Well, let's see what we have here. Looks like we are going to have some exercises to help establish what the total basis is in purchased assets. So we know that we always include the purchase price, but what else do we include in the basis of property that we have acquired so that our balance sheet presentation is correct? So let's go ahead and get started here. It says a company purchased land for $350,000 cash. Real estate broker's commission was $25,000 and $35,000 was spent for demolishing an old building on the land before construction of a new building could start. Current year property taxes are $3,000. Under the historical cost principle, the cost of the land would be recorded at what? Okay. So we're going to go through here and we're going to figure out which of these items we need and which ones we don't. Hopefully we know that our $350,000 purchase price is definitely a good cost. We're always going to include that in the cost. It says real estate broker's commission was $25,000. Well, it doesn't actually tell us who is paying this real estate broker's commission. That is usually paid by the seller, but we're going to assume that it's paid by the buyer, because if it is paid by the buyer, this is definitely a cost that we want to consider. $35,000 for demolishing an old building is absolutely a cost that we're going to consider. And then the last one, we have current property taxes of $3,000. We will not consider this number because the property taxes are current. If the property taxes, if these were delinquent taxes that we were going to pay one time as a condition of purchasing the land, that would be another story. But they're current, so those are just going to be, those are of a recurring nature, and so we're going to expense those each year. We got $350 plus 25 is $375 plus another $35,000. Looks like our final answer is $410,000 for the land. Okay. Second question right here. It says a company purchased land for $94,000 cash. Real estate broker's commission was $5,000 and $7,000 was spent for demolishing an old building on the land before construction of a new building could start. Proceeds from salvage of the demolished building were $1,200. Under the historical cost principle, the cost of the land should be recorded at, well, we counted the purchase price last time, so we probably ought to include it again, $94,000. We included the real estate commission last time, so we're going to include that again. And the cost of raising the building was $7,000. We're going to include that again. Now, we don't have current property taxes, but we do have proceeds from the building of $1,200. And we are going to include that, but it's going to be as a subtraction. That's money that we got back. Let's just say this old building that we demolished for $7,000, we demolished it, and there was a whole bunch of copper tubing in there that they used for plumbing, and we were able to sell that. Well, when that happens, we have to subtract that. So let's just see here. We have $94,000. Plus 5,000 plus 7,000 minus $1,200 scrap. So 104,000. What was that? 104,800 is our final answer. Let's do one more. Let's see here. It says Raines Company purchased equipment on January the 1st at a list price of $125,000 with a 2% discount if payment is made within a 10-day discount period. We've looked at this before, but in a retail setting. Payment was made within the discount period. Raines paid $6,250 sales tax, so they live in a very low sales tax state, evidently, and paid installation charges of $2,200. Prior to installation, Raines paid $5,000 to pour a concrete slab on which to place the equipment. What is the total cost of the new equipment? Okay, so if we take this discount, that means we never paid that particular 2%. So all we have to do to figure out this out is just take our purchase price and multiply it by 1 minus the discount rate, which is going to give us 0.98. So our discount was $2,500, the difference between $125 and $122.5. Okay, we're going to add to that the sales tax. Let me go ahead and write this stuff down. We had $122.5, and then we had sales tax of $62.50. Let's see, installation charges are $2,200. Now, what do we do with the $5,000 to pour the concrete slab? We are going to actually include that, and the reason we're going to include that is because if we had not purchased the equipment, we would have never incurred that cost. So the $2,200 is for the installation charges, and we're going to add the $5,000 pouring the concrete. That gives us a final basis in the property or the equipment of $135,950. All right, that'll be it for this video, and then we'll come back and look at some basket purchase examples next.